Hello, welcome back to Analysis Finance again. What we are trying to talk today is how to pick a good mutual fund for your investments. Uh, why people invest in mutual fund is one of the main reason because it gives more returns than the normal FD returns that we get in the market. Normal FD returns are of around 6 to 7%, and if you're lucky enough, some banks will give you 7.5 or 8%, but I am not sure about those. Yeah, yeah. So normally a mutual fund gives you at least more than 10% of returns per year. So that's why people pick mutual funds. And when talking about mutual funds, uh, recently I've got a couple of questions from many different friends of mine asking how to pick a mutual fund based on different criterias. So I'll just directly get to the point. First thing is, when going through different mutual funds in a broker's website, there are many different brokers like Upstox, Zerodha, Grow, and from Axis Bank, from HDFC Bank. They have different mutual fund investment brokers. Yeah. So when going through their website, you can find the experience of the fund manager. Okay, the fund will be managed by either two people, three people, or four people. It depends on the fund size. So the fund manager, at least the senior fund manager should be having at least 5 or 6 years experience minimum. Minimum. That's the most basic experience that you can expect from a fund manager. So that's one thing. Second thing is, the fund that you are planning to invest should be having at least a asset under management of 5,000 crores. Okay, because why I'm saying is, the larger the fund, it's not 100% sure, but still the safety would be a bit more compared to a very large, very low value funds. So the asset under management should be at least 5,000 crores. Then there are a rating for separate mutual funds. There are separate ratings. So when you go to the website called Morningstar or Wind or anything something like that, you can find the rating of this particular mutual fund. So the rating should be at least 4 star or at the best 5 star. So just try to go with that one particular factor. Then another thing would be expense ratio. Expense ratio means the amount of commission that they are gonna charge from you for managing the fund when you are redeeming the funds. They'll charge this particular amount when you will be redeeming the funds. Okay, so while withdrawing, you have to keep in mind that the expense ratio should be less than 0.7 percentage or 0.8 percentage. If it's more than that, then the amount of capital gains that you get, I mean, the amount of expense ratio will take a large chunk of the capital gains that you are getting. So be careful about the expense ratio percentage which the mutual fund is offering. So try to pick a mutual fund which has almost 0.7 or less than 0.7 or 0.8% as expense ratio. Another thing would be, the fund should be having at least 5 years of track record experience, because if a fund is performing for the previous 5 years and if the fund existed for the 5 years, then there's a high good chance that it can give good positive healthy returns in the future. It's not 100, it's never 100% sure, but still it can depend on the market volatility, but still it gives you a more of an upper edge, because if the fund is giving you at least 12% or 13% CAGR, compounded annual growth rate, for the last 5 years, then comparatively the fund is probable to give you 10 to 13% of returns in the next upcoming years. And another thing which we have to take in care is, uh, different there are many different kinds of fund. So um, if I am trying to get into those, there will be a hell lot of complications into that thing. So there are growth funds, there are dividend specific funds. So for example, in whatever you are investing, if you are planning to invest in equity, okay, equity means the companies that are listed on the stock market, those are equity investments. Okay, so if you are planning to invest in equity, just check the mutual fund portfolio in which all companies they are invested. Okay, you can see these data in different mutual fund rating websites. So just go through the companies and the amount of percentage which the mutual fund is holding. For example, if a mutual fund called ICICI Prudential Mutual Fund is holding a company called Reliance, then uh, then you just have to check if the mutual fund is holding too much Reliance. Okay, if it's more than 10%, normally none of the mutual funds will hold a company more than 10% of its entire portfolio. So just check how much percentage of the company is being holded by the mutual fund. So these are some certain factors to keep in your mind. So I was just trying to keep it as simple as possible to make you understand. So one thing is check the experience of the fund manager. Second thing is check the asset under management of the mutual fund. Third thing is check the previous year returns of the mutual funds. Then fourth thing is uh, the expense ratio should be less than 0.7 percentage or 0.8 percentage for your own investment growth. Then another thing would be what was that? 4-star rating. At least 4-star rating should be there for the mutual fund. Okay, and then regarding the fund types, I'll make another video out of it. So thank you so much for watching. See you next one.